The markets have slowed down in momentum and are actually reversing. Bitcoin making lower lows on the daily, and we are now still above the 200-day, still above the macro resistance, but we are in fact breaking into lower lows. Bitcoin has now made a low lower than the previous low from February 12th, and this puts us in a very different position than we were before, where we were seeing higher lows. Now we're breaking into lower lows. Momentum has been shot. The S&P 500 is also in a very similar position on the daily. Both Bitcoin and the S&P are above the macro resistance. They're both above the 200-day SMA, but very close here. The S&P is really close to shifting direction back down. There's not yet a lower low breakdown confirmation for the S&P, but certainly you can see that the momentum is starting to slow down. Bitcoin, the S&P, pretty much in the same spot here. And why is that? Well, the main reason is what Jerome Powell just told us. And I know a lot of people, we talked about this in the last video. I was talking about how what Jerome Powell said was, very hawkish, a lot of hawkish rhetoric. It's pretty bad news for the market. And a lot of people were kind of in denial about the fact that what he said was not good. But it's showing today, guys. I mean, what Jerome Powell said is that rates are going to go higher than we were told, and they're likely going to stay higher than we've been told. This is all very bad news for the markets. It means that markets are going to have a much more difficult time finding growth and sustaining growth. What Jerome Powell said this week is a huge change for investors and traders. Markets are now expecting a potential 50 basis point increase in the next meeting. Possible. They haven't actually made a decision yet, but if you think about it, I mean, that's pretty bearish news. The Fed has been going from 75 to 50 to 25 to now back to 50 possibly. That's kind of an unexpected move, and this is definitely going to be very uncomfortable for investors. So I think there's going to be we're going to probably find more bearish pressure. I do not see a reason for something like 2001, 2008. There's no crisis per se, but I think that at the very least, we're going to get a lot more sideways action, a lot less momentum now, and things are going to change. Bitcoin is above the 200-day SMA. The S&P is above the 200-day SMA. And the 200-day SMA is really considered the bull market, bear market threshold. All major uptrends take place above the 200-day, and all major downtrends take place below the 200-day. So Bitcoin now seeing lower lows in the short term, that 200-day right there, that's a huge level. That is very important. Question is, are we going to hold this macro resistance downtrend line as support and turn the 200-day SMA into an accumulation zone before building back out? Or is it just going to be a place that we stop along the way before further downside? That's the question, and that's what we're going to have to see. If the S&P loses this macro resistance, loses the 200-day, and begins to push lower, well, this is just going to be very, very bad news for Bitcoin. You guys know Bitcoin's highly volatile, so we could see some major swings here. Something that is possible that we discussed a couple months ago was the possibility of an inverse head and shoulders. That is something that we're going to find out very soon, that if we can hold the macro resistance as new support, that could be in fact just a right shoulder and a confirmation that the previous resistance is new support. So that level is coming in, just below 20,000, right? That's the area that we got to hold. Right, if this is going to be, in fact, a longer term increase in momentum. In the short term, what we are seeing is that there is a decrease in momentum, but the 200-day SMA is the real key level that I'm waiting to see, how the market reacts to that level. That's the bull market, bear market threshold. And overall, with what we've seen from Jerome Powell this week and the fact that interest rates are going to be going higher than we expect, they're going to be going higher than we've been told, and they're going to be staying higher for longer than we've been told, it opens up the door for a trader's market for the next 5 to 10 years. I think it's quite possible that something like the 60s to the 80s, where the price basically has no significant change for 5 to 10 years, where we retest the same levels for 5 to 10 years. The same thing happened, not just the 60s to the 80s. The same thing happened from 2000 to 2010. No significant change in price. And every time the stock market has a major uptrend, and then we get these interest rate hikes or some kind of crisis takes place, the market goes sideways for 5 to 10 years, right? Same thing happened here. And we are pretty much right on time for the next phase of the market, basically, seeing major downswings and also major upswings to new all-time highs, but ultimately seeing no significant change in price in the midst of tremendous volatility. So this is where it gets confusing for people, because when I say no significant change in price, they think that I mean that the market's going to just go sideways, but that's not what I'm saying. If you look back at the 60s to the 80s, for example, the last time that interest rates were on a high trajectory as they are right now, do you see how much volatility there is here? From this low to this high, that's 50% up, followed by 40% down, followed by 77% up, followed by 50% down, followed by 130% up. For the S&P 500, starting to sound a lot like Bitcoin there, right? Well, the same thing happened over here for the better part of a decade, 100% up, 50% down, 100% up, 50% down. So when I say sideways market, I'm talking about massive moves. Seeing the S&P hit something like 5,500 to 6,000, followed by a massive swing back below 3,000. Guys, this is what sideways is in a volatile market. So that's where it gets people confused. But the ultimate thing is, like I said before, no significant change in price for the next 5 to 10 years. But in the middle of that, insane rallies, insane dumps, a trader's market. This is a lot of information to take in, and it's something that is kind of shocking to people. But I would say we have to start to consider that maybe we need to put our trader hats on and not expect up only, right? The environment that we were in that drove markets up in a straight line is no longer the same. All of the factors that drove this uptrend are being reversed, which means that we're likely going to see a sideways market, a trader's market. So at this point, really, it's going to be all about adapting to the new environment. Adapting to the new environment. That is what we're seeing, guys. That's what's happening now. A trader's market is likely coming for the next 5 to 10 years, and that's going to change everything. That means that Bitcoin's likely not going to play out the same type of cycles that it did before. The cycles will likely become compressed. That means we likely are going to hit new all-time highs for Bitcoin and the stock market, but they just may not be sustained as much as they were in previous cycles. And in fact, Bitcoin has also not sustained its current, or its previous all-time high, guys. It was not sustained. We fell below it. So even before all of this, the cycles were already getting compressed. And the idea here is that there may be further compression. Whatever happens in the short term doesn't matter. What I'm talking about is that we have further compression. It's a lot to take in. I mean, we're probably entering a new environment here, and we're going to have to adapt and change our approach to how we do things, because those who don't adapt aren't going to do well. Hope you guys enjoyed this video. We'll talk about more of this in the future. Smash the like, subscribe, and I'll see you all in the next video.